Introduction of Topcoal Corporation Berhad. Topcoal Corporation Berhad, established in 1991 by Tan Sri Dr. Lim Wei Chai, has grown from a single factory with one production line into the world's largest manufacturer of clothes. Headquartered in Satyahala, Malaysia, the company operates 50 manufacturing facilities across Malaysia, Thailand, China, and Vietnam, and maintains marketing offices in the United States, Germany, and Brazil. In addition to a large selection of clothes, Nutriel, latex, mint, and sugar cleans. Top Clothes also sells non-glove things like face masks, dental dams, exercise pants, and household goods. The company serves approximately 2,000 customers in 195 countries, commanding about 26% of the global rubber glove market share. The company was listed on Bursa Malaysia in 2001 and on the Singapore Exchange in 2016. It has received recognition for its corporate achievements, including inclusion in Forbes Glove 2000 lists. Top Glove is committed to producing high gloves quality efficiently and at low cost, aligning with its business's direction to enrich and protect human lives. Introduction of Nestle Malaysia Berhad. Nestle Malaysia Berhad is a prominent food and beverage manufacturer in Malaysia, operating as a subsidiary of Nestle SA, the world's largest food and beverage company. Established in 1912 as the Anglo-Swiss Condensed Milk Company in Penang, it relocated to Kuala Lumpur in 1939 to accommodate its expanding operations. Headquartered in Petaling Jaya, Selangor, Nestle Malaysia employs over 5,000 individuals and operates 6 factories nationwide. The company produces more than 500 halal certificate products, many of which have become household names in Malaysia, including Milo, Maggi, Nescafe, KitKat, and Nestle Omega Plus. Nestle Malaysia operations are divided into two main segments, food and beverage and others. The food and beverage segment encompasses products such as powder milk, beverage, coffee, culinary items, ice cream, confectionery, and cereals. The other segments included nutrition, Nestle Professional, Nestle Health Science, and Nespresso. The company's mission is to unlock the power of food to enhance quality in lives for everyone today and for generations to come. This proposal strives in its commitment to delivering high-quality, nutritious products while maintaining sustainability and social responsibility.
So I will continue for the financial ratio of the Top Glove. So the first one is a liquidity ratio. Liquidity ratio for the current ratio is a current asset divided by current liability. We get the 1.93. So the Top Glove Corporation Berhad recorded a current ratio of the 1.93, meaning the company has 1.93 in a current asset for the every 1 ringgit current liabilities. This ratio measures the short-term debt paying ability for the company, and the result indicate the Top Glove is in a strong position to meet a short-term obligation. So next is a quick ratio. Quick ratio, this is a quick asset divided by current liabilities. So the Top Glove get a 1.53. So that means that Top Glove Corporation Berhad recorded a quick ratio of 1.53, meaning it has a 1.53 asset that can quickly be converted into cash for every 1 ringgit of a current liabilities. This shows that the company can meet a short-term debt without relying on inventory. Next is a activity ratio for the Top Glove Corporation Berhad is a total asset ratio. Total asset ratio is Top Glove Corporation Berhad get a 0.36 time, which means a total asset turnover ratio of 0.36 times, which means Top Glove Corporation Berhad generate 0.36 in sale for every 1 ringgit in total asset. This ratio measures the inefficiency in using its asset in producing sale. So for the last one is account receivable turnover. Net sale divided by average trade receivable. The Top Glove Corporation get a 9.28 times. A ratio of 9.28 means Top Glove Corporation Berhad collect its average account receivable 9.28 times during the period. A ratio 9.28 times indicate that on average the company collect its receivable every 39 days.
and I'll be explaining the profitability ratio. And for profitability ratio, it's split into two parts, which is the profit margin on sales and the return of common equity. For the profit margin on sales, it has a formula, which is the net income divided by the net sales. And for the top glove case, it's the net income is 21,412 divided by 2,514,408, and we divide them, and the answer that we're going to get is negative 0.85% after we multiply it by 100%. And for the return on common equity, it comes with the formula of net income minus the preferred dividend divided by the average common equity. And in that case, it's going to be 64,876 minus 0 divided by 5,835,496 plus 5,926,115 divided by 2, which is going to give us the result of negative 1.10%. And for the top glove, it had a profit margin of negative 0.85%, meaning it lost money for every ringgit it earned in sales. This shows the company was not making a profit as its costs were higher than its sales. The negative margin signals is financial trouble, possibly caused by higher costs, lower demand, or price competition in the glove industry. And for the top glove, a return of equity, which is negative 1.10%, means the company had a loss and did not make any profit for its shareholders. Instead, it reduced their investment. This shows poor financial performance and weak use of shareholders' money. Thank you. It's illustrating the leverage ratio of the company Top Glove. Leverage ratio is split into two parts, which is debt to assets ratio and its debt to equity ratio. For the debt to assets ratio, it comes with a formula of total assets divided by the total liability. For the total assets, it's 1,112,597 ringgit over the total liability, which is 6,958,093 ringgit. And we're gonna divide the both numbers, and we're gonna multiply the answer given by 100, which is gonna give us 16.13%. Top Glove has a debt to assets ratio of 16.13%, which means the company uses very little borrowed money and it mostly pays for things with its own money. It's good because it shows that the company is not at risk and it has a very strong, it's in a very strong financial position. It can handle hard times better, and for example, like the economy, if it got bad, or the loans cost more, if the loan costs more. And for the debt to equity ratio, it comes with a formula of total debt over total shareholders' equity, which here is 1,122,597 for the total debt, and for the total shareholders' equity is 5,835,496 ringgit, which is going to give us the answer of 0.19. Top Glove has a debt to equity ratio of 0.19. This means the company has 19 cents of debt for 1 ringgit of its own money. It shows that the company borrowed very little and mostly uses its own funds to run the business. This is a good sign because it means the company is not at high risk from loans or interest payments. It is in a strong and stable financial position.
Okay, now we move to Nestle Malaysia Berhad 2024. First, liquidity ratio. For the current ratio, we get 0.82 ratio 1. For the interpretation, Nestle Malaysia Berhad recorded a current ratio of 0.82:1, meaning it has only 82 sen in current asset for every 1 ringgit of current liabilities. This indicates potential difficulty in meeting short-term obligation. For the quick ratio, we get 0.51, which ratio 1. The interpretation, Nestle Malaysia Berhad recorded a quick ratio of 0.51 ratio 1, meaning it has only 51 sen in the asset quickly convertible to cash for every 1 ringgit of current liabilities. This indicates the company may struggle to cover short-term debt without selling inventory. For the activity ratio, total asset ratio, we get 0.69 times. Interpretation, a total asset turnover ratio of 0.69 times, which means Nestle Malaysia Berhad generates 69 sen in sale for every 1 ringgit in total asset. This ratio measures the inefficiency in using asset in producing sales. For account receivable turnover, we get 8.21 times. A ratio of 8.1 times means Nestle Malaysia Berhad collect its average account receivable 8.21 times during the period. A ratio of 8.21 times indicates that on average the company collect its receivable for every 44 days. Profitability ratio, a profit margin on sale. For Nestle Malaysia Berhad, we get 11.9%. Nestle Malaysia Berhad earn 0.119 ringgit in net income for every 1 ringgit of sale. This indicates a moderate profitability level, where the company is able to convert a reasonable portion of its sale into actual profit. A profit margin of 11.9% suggests effective cost management and a healthy operation structure, especially in the FMGC, fast-moving consumer goods industry where margins are typically tighter. For the return on common shareholder equity, we get 30.4%. Nestle Malaysia Berhad is generating 0.304 in profit for every 1 ringgit of equity invested by shareholder. This is a strong ROE, indicating that the company is using shareholder fund efficiently to generate profit, and ROE above 20% is typically considered excellent, showing high financial performance and a good management effectiveness is utilizing equity capital. For the leverage ratio, debt to asset ratio, we get 73.65%. Nestle Malaysia Berhad recorded a debt to asset ratio of 73.65%, which means that 73.65% of the company total asset are financed through debt. This indicates that the company relies heavily on borrowed fund to support its operation and growth. While a high debt ratio can increase return during good time, it also exposes the company to higher financial risk, especially when interest rate rise or during a economic downturn. For debt to equity ratio, we get 2.80. Nestle Berhad has a debt to equity ratio of 2.8, meaning of every 1 ringgit of shareholder equity, the company holds 2 ringgit 80 sen in liabilities. This high leverage level suggests that the company is significantly financed by debt compared by its own equity. While this may expansion in the short term, it also brings higher interest burden and financial risk, especially in challenging economic conditions. It is important for the company to manage its debt levels wisely to maintain long-term stability.
So I will continue for the comparison between two companies, which means that the liquidity ratio for the current ratio of the Top Glove is 1.93 and the Nestle is 0.82. This means that the Top Glove has a current ratio better compared to Nestle. A current ratio above 1 is generally considered healthy, meaning the company can meet it a short-term obligation. Nestle ratio below 1 is a suggest potential short-term liquidity risk. For the second one is a quick ratio. Quick ratio for the Top Glove is 1.53 and the Nestle is 0.51. This means that Top Glove have a stronger liquidity with a quick ratio of 1.53, which is above the ideal benchmark of 1, and this means that Top Glove is a better position to meet short-term liabilities using its most liquid asset. Nestle quick ratio of 1 below 1 is indicating potential liquidity concern if quick assets are inefficiency. For the second one is activity ratio. Activity ratio for the total asset turnover ratio of the Top Glove is 0.36 times and the Nestle Malaysia Berhad is 0.69. This means that the Top Glove recorded a total asset turnover ratio of 0.36, meaning it generates in revenue for every one ringgit of asset. In comparison, Nestle achieved a higher ratio of 0.69, which means that the Nestle is more efficient in utilizing its asset to generate revenue than Top Glove. And for account receivable ratio for the Top Glove is 9.29 times and the Nestle Malaysia Berhad is 8.21 times. This means that the Top Glove recorded an account receivable turnover ratio of 9.29 while Nestle ratio was 8.21 times. This indicates that Top Glove collect its receivable more frequently within a year, which means that the Top Glove is more efficient managing a credit and cash flow compared to Nestle. And for profitability ratio is a profit margin ratio for the Top Glove Corporation Berhad is a negative 0.85% and the Nestle Malaysia Berhad is 11.9%, which means that the Top Glove recorded a negative profit margin of negative 0.85%, indicating its equal a loss, while Nestle achieved a positive profit margin of 11.9%. This means that the Nestle is significantly more profitable as it is able to retain a higher portion of revenue as a profit compared to Top Glove. And the return on common shareholder equity ratio for the Top Glove Corporation Berhad is a negative 1.10% and the Nestle Malaysia Berhad is a 30.4%. It means that the Top Glove recorded a negative return on equity of negative 1.10%, indicating a loss for each shareholder, while Nestle achieved a strong ROE of 30.4%, reflecting high profitability and efficiency use of shareholders' fund. This means that the Nestle is significantly more effective in generating return for each shareholder compared to the Top Glove. For the last one is a leverage ratio. Leverage ratio for the debt to asset ratio for the Top Glove Corporation Berhad is 16.13% and the Nestle Malaysia Berhad is 73.65%. That means the Top Glove has a debt to asset ratio of 16.13%, indicating a low reliance on debt to finance its asset, while Nestle has a much higher ratio of 73.65%, suggesting heavy use of debt financing. This means that Top Glove is in a more conservative financial position with lower financial risk compared to Nestle. And for the last one is a debt to equity ratio for the Top Glove Corporation Berhad is 0.19 and the Nestle Malaysia Berhad is 2.80. This means that Top Glove recorded a debt to equity ratio of 0.19, indicating low reliance on debt compared to its equity, while Nestle ratio of 2.80 shows a much higher dependence on debt financing. This means that Top Glove maintain a more conservative capital structure with a lower financial risk than Nestle.
Diversification expands beyond gloves into adjacent medical products such as gowns, masks, hospital consumables, stabilized revenue during glove demand fluctuations, automation, digital transformation, invested in robotics and smart manufacturing, lower operational costs and reduce labor dependency, improve ESG compliance and operational efficiency, sustainability, ethical practice, enhance labor conditions and transparency, undergo third-party audits to rebuild trust, adopt green practice, renewable energy, water conservation. Product innovation in health wellness, reformulate products, less sugar, add probiotics, organic options, develop plant-based functional food and beverages,
appeal to younger health-conscious consumers. Digital transformation, strengthen e-commerce and digital marketing, use data analytics for personalized offering and targeted promotions, partner with local delivery platforms to boost online sales. Localized sustainable supply chain. Source raw materials locally to reduce cost and carbon footprint. Collaborate with Malaysian farmers for supply chain control. Invest in sustainable packaging and zero waste operations.